Welcome to Oil and Gas Investor Headlines for the week ending in August 18th. I'm Kate Clark. Ready or not, September is just around the corner, and so is Hart Energy's Doug Mid-Continent Conference and Exhibition. Join us September 19th through 21st at the Cox Convention Center in Oklahoma City to hear from the executive speakers from the SCOOP and STACK's biggest producers. Learn what's working, where the rigs are headed, and hear from the legendary former Oklahoma football coach Bob Stoops, Boomer. For more information, visit heartenergyconferences.com. The week kicked off in Denver, where Oil and Gas Investor was on the scene at the Oil and Gas Conference by Intercom, where 3 E&P leaders take future A&D tribulations. At the conference, Range Resources CEO Jeff Ventura faced tough questions following a lackluster second quarter earnings report. Analysts had a negative view of the report, particularly the underproducing legacy wells acquired in the Terryville complex in Louisiana. Range officials said the results were due to new completion techniques on drilled but uncompleted wells. Meanwhile, Jagged Energy CEO Joe Jagged said his company wants to add acreage in the Permian, but it's been tough sledding. As Jagged prepared its first securities filing prior to its IPO, the company had 61,000 net acres. Since then, it's added about 9,000. Jagged described the process as, quote, combat acre by acre. And Tony Sanchez, CEO of Eagle Ford producer Sanchez Energy, said he hears rumblings of potential sales in the basin. He believes transactions will happen despite the maturity of the play. At the same time, Sanchez also made it clear nothing keeps a company confined to the Eagle Ford. Sanchez also owns about 40,000 net acres in the Tuscaloosa Marine Shale. Also in Denver, Whitey Petroleum said it agreed to sell some of its core area assets in the North Dakota. Rimrock Oil and Gas Williston agreed to pay $500 million for nearly 30,000 net acres in Dunn and McLean counties. Whiting is fighting off an estimated $300 million overspend of cash despite reducing capex. Meanwhile, the oilfield services sector continued to consolidate with the announcement that Nabors Industries has agreed to acquire Tesco Corporation in an all-stock merger. Nabors expects the roughly $216 million acquisition to accelerate its growth and strengthen its financial position. Finally, this week's U.S. Gulf of Mexico lease sale brought in about $121 million in high bids for the offshore blocks, primarily in the lower tertiary trend. It was the country's first Gulf-wide lease sale since 1983. Total E&P USA led the way with a $12.1 million bid for the Gardens Banks blocks. Thank you for watching Oil and Gas Investor Headlines. For more on these and other stories, check out oilandgasinvestor.com. See you next week.
To stay up to date on the most recent Hart Energy videos, subscribe to our YouTube channel by clicking here.